Brad Thomas, the IYR, which is the ETF, which tracks U.S. REITs, is up 7% this year versus a flat S&P. It was flat last year when the S&P was flying. So what's driving it this year?
Well, Mr. Market was not in favor with REITs last year. We saw the sell-off in May, starting with the taper tantrum, as we call it. And so now we're seeing that REITs are now more in favor. They're not bonds. And that's what really caused the sell-off and the overreaction to REITs back last year was the sell-off that we're seeing. So now we're back to a very sound valuation today in REIT world.
All right, let's talk about three of the REITs which you like best. Realty Income, American Realty Capital Properties, Street Properties. Let's start off with Realty Income.
The O is, they're very similar. All three REITs have, they're all triple net lease. They're standalone properties. O was the largest triple net lease up until 2 weeks ago when ARCP, the next one we mentioned, merged with another company called Cole Real Estate. O has around 3,000 properties, just under 3,000 properties in 49 states. They're paying about a 5.25% dividend today. This company has never cut a dividend. In fact, Greg, they have paid and increased dividends for almost 20 years in a row, which will be a dividend aristocrat as ranked by S&P. So very stable revenue model, very diverse portfolio. They've never dropped below 96% occupancy. Very sound.
Now let's talk about American Realty Capital Properties. What's special about this one?
Very similar to O, with the exception of O does not, ARCP does not have the track record of O. ARCP has only been around 2.5 years. They started with an IPO at around $80 million. And now they've grown into a $20 billion enterprise. So it's a very similar model. ARCP does pay a higher dividend, around 7%. There is more risk, but it's a higher dividend.
And then finally, Street Properties. They own a lot of industrial space, some Amazon warehouses, right?
Absolutely.
That's got to be good business.
It is, and they're diversified as well. They have Amazon in Europe and Germany as well. But Chambers Street started as a non-traded REIT, so it's not a brand new REIT. They listed last year, or converted to a public REIT structure. They were already a non-listed REIT, so we know about this company. They've been around a long time. They do have a very diverse portfolio. They're growing. They are big boxes. They don't own fast food. They're large industrial facilities, and they pay monthly dividends. So I really like that company as well.
All right, REITs are on a roll. Thanks a lot, Brad.
You bet. Thank you.
Thank you for watching The Street.